Fund Supermart, your online gateway to unit trusts.
Hi Marcus, thanks for coming down today. How does the outlook for current macro conditions affect the Europe Equity Growth Select Fund? And what are the potential tailwinds and issues afflicting Europe?
So I think the situation in Europe has changed massively over the past few years. Europe has gone from almost being the problem child of global equity markets to now probably being the region showing the biggest economic growth in a slower growth world. And you look at a lot of the macroeconomic data, and it generally looks quite positive at the moment. We've got European PMIs at a 4-year high, business confidence is at a 3.5-year high, and finally unemployment seems to be moving in the right direction as well. So in our Europe Equity Growth Select Fund, we definitely believe that we can capture some of that growth that finally is beginning to emerge in the European region. And importantly for us as bottom-up stock pickers, what you've done is you've seen the market moving away from some of the macro news flow and finally beginning to focus on the bottom-up fundamentals. So for us as stock pickers, that's creating some increased dispersion within sectors. So for those of us that can get our stock selection right, I think there are greater alpha opportunities available.
With falling oil prices rattling the market, what is the impact, if any, on the fund?
Well, firstly, we don't actually own any oil stocks, so there's no direct impact. But secondly, I think you should remember that Europe is a net importer of oil, so should be a beneficiary of a structurally lower oil price. And many of the holdings we have in the fund, whether it's consumer, even some healthcare names, will directly benefit from a lower oil price because it will lead to lower input costs for a lot of the products they produce. And in the fund, we focus on companies with pricing power that can hopefully maintain prices. So with lower input costs and maintaining prices, you should see a slight uplift to margins. And then also on the consumer side, consumers hopefully with spending less in the petrol tanks should see more money in their wallets. And we hope that will translate through to some real spending increases for discretionary items. So I'm confident that a lower oil price should benefit a lot of sectors within Europe.
Please share about the investment approach of the Europe Equity Growth Select Fund.
Yeah, we define ourselves in the team as pure bottom-up stock pickers. And essentially we're looking for companies who can demonstrate structural growth through the investment cycle. And when you think of growth investing, there are typically two types of growth investing. The first is cyclical growth, where you try and time the bottom and top of the market. That's not what we try and do. Instead, we're looking for high-quality businesses that can grow throughout the market cycle due to company-specific factors. So there you're looking at companies that can differentiate their product, they can differentiate their brand, differentiate their business model, have strong management teams, in order to generate those high returns consistently over the longer term. And then we're typically investing in these companies really for a minimum period of 3 to 5 years. So you're looking for companies that can reinvest those high returns on invested capital back into the business to fuel a future economic profit. And really the benefit we have is not only the commitment to our process, but also time, being able to take the long-term view.
There is no small cap exposure in the fund. So what are the key differentiating factors from the other European strategies? And will this put us at a disadvantage should there be a rally in the segment?
I think the key advantages we have in our fund are firstly the investment process, which we just described. We've been applying that same investment process since 2003. And since then have been able to outperform in 11 of 13 years. So we've proven that it does work. Secondly is really the commitment to that process. And we stick to that process throughout the market cycle, even during the periods that are somewhat trickier for our style of investing. And thirdly, I mentioned it briefly earlier, but it's time. Having the patience and discipline to continually take that long-term view. Because in a market where investors are now so focused on the here and now, to be honest, most of the time, next quarter's earning results don't matter too much to us. It's how the company is progressing on a 3 to 5 year view. So we can exploit some of these inefficiencies in a market that becomes so focused on the here and now by continually looking at the long-term view. And I think as a stock picker, that's one of the major alpha sources we have left available.
Why should one invest in European equities now?
The question I always get this question a lot, and my first answer is always the companies. And wherever you look in Europe, whichever sector or subsector, you find some of the best leading companies operating in particular niche markets based in Europe. Whether it's the beer market, you've got 80% of the world's beer market in Europe. The luxury goods, three or four of the largest luxury goods companies are all based in Europe. Or many industrial subsectors, you find a huge depth in the European equity markets, typically trading at lower valuations than you find in the US. Added to that at the moment, I think Europe is really a recovery story. And the attraction in European equities is really the fact that we probably are 2 or 3 years behind the US in terms of our recovery. Margins are low, but finally growing. Earnings are really low, and we haven't seen any substantial earnings growth for 4 years. But now this all seems to be beginning to appear. And with the operating leverage that most companies have within their income statements, we're confident that when we see some top-line growth, that can really have a pronounced impact on the bottom line. So I think it's a fantastic time to be looking at European equities, both for the short term, but probably more importantly for the longer term investors.
Thank you.
No problem.